You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 27th day of February, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first one, that's our live training room. That is private, reserved for members only, and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us, in about 50 minutes, he'll walk you through it step by step. It's a piece of cake. No credit card required. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which, unlike the morning broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In the email there'll be a link. So at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. The benefit is you'll have access to the question box so you can ask questions and participate in the discussion. Now there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to catch up later. You can do both of those via our YouTube channel, which is easy to remember, youtube.com/CFRN. You've already got the YouTube part memorized, I'll assume, so all you got to remember is CFRN, Christian Financial Radio Network, but all you got to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. And it's also a great way to get to know who we really are. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but it's there, matter of public record. Exactly how we evolved day by day over the years. Since we first launched our live training room way back in 2008. I think it was more like 2010, 2011 when we added the YouTube part. I think you can scroll back as far as 8 years. Anyway, just poke around. Pick some days or years at random and just listen in a little bit. Watch a little bit. You get the idea. Our schedule for each afternoon broadcast is right here. So we're going to dive into our daily devotional. The topic we're on right now is how to deal with complicated people. Maybe you know some complicated people, and maybe you are a complicated person. We're on day 2 of 7. Our scripture today is 1 Corinthians chapter 12, verses 12 through 18. I'm going to share it with you from the Message translation. You can easily enough see how this kind of thing works by looking no further than your own body. Your body has many parts, limbs, organs, cells, but no matter how many parts you can name, you're still one body. It's exactly the same with Christ. By means of his one Spirit, we all said goodbye to our partial and piecemeal lives. We each used to independently call our own shots, but then we entered into a large and integrated life in which he has the final say in everything. Each of us is now a part of his resurrection body, refreshed and sustained at one fountain, his Spirit, where we all come to drink. The old labels we once used to identify ourselves, labels like Jew or Greek, slave or free, are no longer useful. We need something larger, more comprehensive. I want you to think about how all this makes you more significant, not less. A body isn't just a single part blown up into something huge. It's all the different but similar parts arranged and functioning together. If foot said, "I'm not elegant like hand, embellished with rings, I guess I don't belong to this body," would that make it so? If ear said, "I'm not beautiful like eye, transparent and expressive, I don't deserve a place on the head," would you remove it from the body? If the body was all eye, how could it hear? If all ear, how could it smell? As it is, we see that God has carefully placed each part of the body right where he wanted it. Again, that's 1 Corinthians 12, verses 12 through 18. The need for complexity. Do you ever wish people around you were less complicated? Certain individuals are just exhausting. It might be a boss who is impossible to please, or a coworker who always contradicts you in meetings. It might be an in-law who creates chaos at every family gathering. It could be a teacher who seems to assign grades by throwing darts at a board. It's easy to assume that if these particular people would just get their act together, your life would be easier. Easier is not the same thing as better, though. Differences bring strength to everything we do as humans. Rather than waiting for complicated people to change, we need to upgrade our perspective of complexity. Jesus modeled this with his 12 disciples. He put together a team that wasn't just diverse, it was a powder keg ready to explode. And he did it on purpose. For example, Simon the Zealot was an ex-member of a Jewish organization that advocated the violent overthrow of the Romans, who ruled over Israel. On the other hand, Matthew was an ex-tax collector, which meant he had worked hand in hand with the Romans to oppress the Jewish people. The only way these two would ever be in the same room was if Jesus invited them. Nevertheless, can you imagine the awkwardness when those two had to hang out? Simon the Zealot and Matthew the tax collector illustrate two things we must do as Jesus followers to engage with people who are different from us. Number one, following Jesus requires us to lay down our past. Is there anything in your upbringing or your history that is keeping you from embracing certain people? Any prejudice or stereotypes? Any hurts or bitterness? Any mistakes or failures? Any false beliefs or old mindsets? We can't take our cues from the rearview mirror if we're going to step into all that God has for us in the future. And number two, following Jesus requires us to lay down our differences. Every church or faith community is made of people with wildly different backgrounds, experiences, political persuasions, and opinions. What makes Christians different is the ability to set aside their differences and come together for a cause bigger than their own. Learn to value the diversity that complicated people represent. Instead of wishing everyone else would adjust their behavior, see if you can adjust your expectations. Maybe they're not bad or rude or mean or ignorant. They're just different. And their difference will add something to you if you're able to embrace it and learn from it. Could it be that you have some preconceived ideas of what people should do, say, or think? Just imagine what it would look like for you to decide to work with the mess, knowing that God often brings complicated people together to create something beautiful. Let's pray. Heavenly Father, thank you for making us one body in Christ, each with a unique role and purpose. Help us to value and honor one another, recognizing that every member is important in your design. Fill us with love and unity, that we may serve together in harmony, bringing glory to you. Guide us to use our gifts for the good of the church and the world. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Thursday. Let me give you the numbers from around the world. We're going to start here in the U.S. with the cash markets, or the indices, as they're called. Currently, the Dow's up 166 points. The NASDAQ is down 162, which is pretty close to 1%. S&P 500 down 19. The Russell 2000 down 8. In the commodity basket, crude oil up $1.53, trading 70.15 last. That's a gain of 2.25%, or a little over $1,500 per contract traded. Gold down $38.90, trading 28.91.70 last. That's a drop of over 1.25%. Silver down 49 cents, trading 31.78 last. That's a drop of a little over 1.5%. In the Asian markets at the close, the Nikkei posted a gain of 113 points. The Shanghai rose 8. The Hang Seng dropped 69. And in the European markets at the close, FTSE gained 24. The DAX dropped 243. That's a little over 1%. And the CAC fell 41. So that gave us a mixed day in Asia. It was a mixed day for the UK. And so far, it is a mixed Radio Thursday here in the US of A. Those mixed markets, boy, that's just when you don't get that great follow through. As futures traders, when it comes to the indices, we like to see all four of the big ones, the Dow, the NQ, the S&P, the Russell, the same color. They can be all red or all green, doesn't matter. Because with futures, you can be long, short, and long again, all in the same hour, if that's what the chart in front of you tells you to do. But, alas, we got to play the hand we're dealt. Dow in the green, rest in the red. On to the news. Ukrainian, how about that? It's easier for you to say. Zelensky is expected to visit the White House as early as tomorrow to finalize and sign an economic deal that grants the U.S. access to revenues from Ukraine's natural resources while helping Ukraine rebuild its war-torn economy. Ukraine is home to roughly 5% of the world's critical raw materials, which include about 17 elements, essential to a wide range of products, including medical equipment, military applications, and consumer technology, like cell phones and electric vehicles. However, an estimated 40% of Ukraine's mineral resources are inaccessible because of Russian-occupied regions. Analysts say the U.S. seeks to reduce its dependence on China, the world's largest producer of rare earth minerals, which controls roughly 75% of the global supply. The preliminary agreement between the U.S. and Ukraine currently does not exclude or does not include explicit security guarantees for Ukraine, which Kiev has sought in negotiations. The deal follows earlier drafts that were rejected due to insufficient security guarantees and a U.S. demand for $500 billion in mineral profits. Wouldn't it just be better if we got the rare earth minerals as opposed to the profits? I mean, if we get the profits from the rare earth minerals, we still don't have the rare earth that we need. So, I guess that's above my pay grade. Religion in America. A new study released yesterday by the Pew Research Center shows the decline of Christianity in the U.S. has slowed and may have actually stabilized. The survey of 36,908 Americans conducted in 2023 and 2024 found that almost 85% of U.S. adults believe in God or a universal spirit, with 62% identifying as Christian, 40% as Protestant, and 19% as Catholic. The news comes after years of steady decline, with previous studies showing 78% of U.S. adults identified as Christian in 2007 and 71% in 2014. The study also found that 29% of Americans are religiously unaffiliated, including atheists, agnostics, and those identifying as nothing in particular. Significant age gaps persist, with only 46% of adults younger than 25 identifying as Christian, compared to 80% of those older than 74. Non-Christian religious groups make up 7.1% of the population, up from 4.7% in 2007. Well, let's turn to Wall Street. President Trump said today that tariffs on Chinese and Mexican imports would move forward on March 4th, and that he would add an additional 10% levy on China, heightening the stakes of his trade battle that has rattled Wall Street and injected an air of uncertainty during his first weeks in office. In a post on Truth Social, Trump framed his decision to move forward with the tariffs as a response to unacceptable levels of drugs coming into the U.S. from Canada and Mexico and supplied by China. We cannot allow this scourge to continue to harm the USA, and therefore, until it stops or is seriously limited, the proposed tariffs scheduled to go into effect will begin next week. Now, if you didn't catch the press conference yesterday, you can probably still see it on C-SPAN in its entirety. They probably got it on a loop or something. I can't remember if Joe Biden ever had a press conference. Certainly not a televised one. But the president for an hour just took questions from everybody. If you didn't see it, it's worth getting to know who the commander-in-chief really is. And it's kind of nice to have one. Been a while. Nvidia stock fell 2% in early trading today after the company's fourth quarter earnings topped Wall Street expectations, but its outlook for the first quarter gross margin came in lower than estimates. Yes, Bart. Bart asked if I would be doing long-term stuff next week. Yes, I will. Okay. Thanks for asking. Currently, Nvidia is down $4.62 a share, 3.5%. Nvidia guided for a gross margin of roughly 71% for the first quarter, lower than its 73% gross margin in the fourth quarter. JP Morgan analyst Harlan Sur noted that the gross margin guidance was below consensus, 72.1%, as the team continues to scale its Blackwell shipments higher and incurs expedite fees to get systems to customers as rapidly as possible. Now, the chipmaker's revenue of $39.3 billion and earnings per share of 89 cents topped Wall Street estimates, according to Bloomberg. So, again, not your father's market. Once upon a time, good news sent the markets higher or individual stocks higher. Bad news sent them lower. kind of just seems like that's how it should be, right? Well, that's just not the case anymore. Times, they have changed. Not to be left out, Amazon announced today its first ever quantum computing chip, joining a growing number of big tech names entering the quantum chip space. Called Ocelot, the chip, according to Amazon, helps solve a key problem for quantum computing systems, which could speed up the push to practical quantum computers. Amazon's announcement comes just a week after Microsoft revealed its own quantum chip called Majorana 1. That's easy for you to say. Google debuted its quantum chip Willow in December. Gaining a lead in quantum computing would be a massive opportunity for the cloud giants, ensuring they'd have first mover advantage in a field that could impact a slew of industries and help drive revenue growth for years. Amazon says its chip helps enable what's called bosonic error correction, an important step to figuring out how to get quantum computing systems to the point where they regularly solve the kinds of calculations that would take classic computers years, I said years, to complete. The times really are changing, aren't they? A measure of home contract signings dropped to its lowest level on record in January as buyers were stymied by cold weather and unaffordable prices. The National Association of Realtors Pending Home Sales Index dropped 4.6% in January from a month earlier, reaching an all-time low of 70.6. A level of 100 is equal to housing contract activity in 2001. Wow. An earlier cyclical low of 70.2 seen in July of 2024 was later revised higher. Compared with a year earlier, contract activity declined 5.2%. From Bloomberg, currency traders navigating a flurry of tariff-related announcements bought the dollar today after Trump confirmed the launch of 25% levies against Canada and Mexico and raised the prospect of fresh levies on China. The tested strategy sent a Bloomberg gauge of the greenback up the most in 3 weeks. Mexico's peso, Canada's loonie, and China's offshore yuan all slid to the day's lows in early U.S. trading. Markets were becoming complacent about tariff risk, according to a currency strategist at Nomura International. It has become clear that Trump's stance on implementing tough tariff measures still exists. Yeah, he says he's going to do it, and unlike so many politicians, good or bad, he actually does it. And from Reuters, the FCC voted today to advance a wireless spectrum auction to provide nearly $3.1 billion for U.S. telecom companies to remove equipment made by Chinese telecom firms Huawei and ZTE from American wireless networks to address security risks. This is a big deal. Congress approved the funding and authorized a one-time spectrum auction by the FCC for advanced 5G grade wireless spectrum in the band known as AWS-3 to help meet rising spectrum demands of wireless consumers. Failing to close that funding gap would have left America's networks needlessly exposed to security risks. Not just America, but you and me, Americans. So nice to know that the government actually has concerns about us. That's a beautiful thing. Okay, on the home front, Logic 247. It's our 24/7 around-the-clock Emini alert service. It's not just E-minis, also crude, gold, silver. Over the last 343 weeks, we've issued over 19,000 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did the recap this morning at 6:30 a.m. Eastern. At the time of the recap, since the markets opened this past Sunday night at 6 p.m. Eastern, we issued a total of 39 alerts. At the time she did the recap, we were still waiting on the outcome of 3. That gave us 36 actionable alerts, of which 4 or 11% would have been stopped out, again based on market structure and that simple process we teach all of our passport holders. Now, the purpose of the logic alerts is to help you learn how to read the chart. You got to be able to read the books, the manuals, the whatever, to pursue whatever career. If you want to be a baker, okay, you got to be able to read the recipe, right? Unless you're going to just make the same cake over and over. But with trading, it's a different kind of reading. You're not reading text, you're reading how price flows. There's things called candlesticks and open, high, low, close bars. And there is a rhythm to the market. You can trade the logic alerts, but make sure you use them for the purpose of learning how to read the chart so you don't need the alerts. You want to get to the point where you can look at any chart of any market, any time frame, and with the help of our humble set of indicators, instinctively know what the next high probability move is. In other words, you can look at a chart and see where the next major resistance is, where the next major support is, potentially, because nobody knows what's going to happen next in the market, although so many claim to. That's just not possible. It defies the laws of science, physics, and even God. But yet, they continue to send you the emails and put it on their websites. Should be illegal, but it's not. So, anyway, take a 30-minute chart and take an alert whether you trade it or not. Draw a horizontal line at the entry point, horizontal line at the initial target, horizontal line at the additional targets, and then the final trade to target will always be the weekly trading zone above on a long and the weekly trading zone below on a short. If you do this enough times, pretty soon, when you look at a chart, those things will just jump out at you. In fact, once you truly see them, you can't unsee them. So if your goal is to trade for a living, start right now learning how to read the chart. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Now, long before we had Logic 247, at 343 weeks is a very long time, but probably twice that long ago, Our original alert service was the concierge trade alerts. Now they're different. Okay. Number one, they don't come out around the clock. They're posted as a static report shortly before or after the Globex Open each evening. I do my best to get them out 5 minutes ahead of the open when I can. Some days life gets in the way and I'm not able to. Last night I was able to, so 5 minutes ahead of the opening of the Thursday session. We all know we're in the Thursday session right now, but what some people don't know is that the Thursday session began last night at 6 p.m. Eastern when Globex opened. So 5 minutes ahead of that open, all of our members and trial members had all of these targets: S&P, the Dow, the Russell, crude oil, the NQ, gold, and silver. 5 minutes before the open. So let's go take a look at this chart. I'm going to start where we always do. The S&P 500 E-mini futures, the bellwether. We're getting that bearish cross. And when we get a bearish cross, sometimes it can lead to significantly lower prices. Now we are at a major support area, the 24% Fib retracement. We came down through the BBC. We attempted to retrace back to it. There just wasn't enough buying interest. So we continued down to the 24. Now anytime you hit a major Fib retracement on a daily chart of anything, you almost always get a bounce. And we did. We spiked it, but then we closed well above it. And then the next day we came down, tested it again, closed basically with a doji, a little tiny body. And where have we been finding resistance? At the step line. Now, if this bearish cross completes itself, that will become, or it is, right now you got resistance times 2 here. The green line's called the BBC. It stands for bull, bear, cross. When price crosses above it, we're bullish and expect higher prices. When price crosses below it, we're bearish and expect lower prices. Higher prices, lower prices. It's pretty simple. You'll notice that the pullback to the BBC holds more often than it doesn't. Whether it's pulling down from above or pulling up from below. The pullback holds more often than not, but eventually it will trade through. So you expect it to hold until it doesn't. That part's pretty simple. Now, institutional traders, the ones who actually move price because of their account size and the size they trade in, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. So what I suggest is that whether you trade futures, stocks, crypto, Forex, ETFs, whatever the case, spend 2 minutes with the daily chart of what you're about to trade before you drop to your smaller time frames. Get that big picture look. Get a free look over the shoulder of the deep pockets that move price. See what they're doing. Maybe if you do what they're doing, it might make things simpler. You'll have to try it and find out. Now we've had support here at the 24. Once, twice, 3 times, 4 times, 5 times. Now if we close today below the 24, then it gets really interesting. Right here where red turned to blue, I would look for some support there. Then at this low, and then bang, you're at the 38% fib retracement. We haven't had a deep retracement in quite a while. Well, we had this right after we put in the new all-time historic high. We did get a 38% retracement. That would be a double bottom. That should be good for a nice bounce. Now 1, 2, 3 days we've bounced off of the 24. But right now we're just sitting on top of it. We've been lower. Buyers came in. Let's just see how convinced they are. We'll know when the market closes today. Are they willing to take this home or not? We'll find out. Okay, the 30-minute chart, that's where all alerts are created. The Logic 247 alerts and the Concierge Trade alerts. The vertical line separates today, Thursday, here's Wednesday, here's Tuesday, and it's been kind of a sloppy week. When price rises to a weekly zone, we expect resistance till proven otherwise. When price drops to a weekly zone, we expect support until proven otherwise. Only 3 things happen when price encounters a weekly zone. 70% of the time, it's going to be consolidation. It can look like this. It can look like this. It can look like this. 20% of the time, rejection. This was an interesting candle yesterday afternoon. Price ran all the way up to the zone, spiked it, ran all the way down to the zone, to the tick, and then at the end of the that was a very active 30 minutes. We closed right in the middle. And then the candle behind the vertical line, that was the closing candle yesterday at 5 p.m. Eastern, and we closed right at the weekly zone. And looking left, we had a bearish cross there. Okay. So this was the open last night. We're below the BBC, so we look for lower prices. We dropped to blue and climbing, which is bullish. We did manage to spike blue and climbing enough to hit that short target. And when the market finds support, it's going to go look for resistance. The pullback held, and the pullback held, and the pullback held, and the pullback held, and then it didn't. We traded through the VBC. After 1, 2, 3, 4 retracements, we traded through. It did take us up to the long target, even took us a little bit above. Now, notice that this high right here, okay, you see right here where the step line crossed blue and climbing and turned it to red and falling. That's an important price, important area. See that? Okay. So when blue and climbing, which is bullish, gets above price, then it becomes potential resistance because it's probably on its way to turning into, oh, you know what, this chart has not updated. We better fix that. There we go. That's more like it. All right. So coming out of the gate, we hit the short target, then we hit the long target. Then price got above, our blue and climbing got above price on its way to becoming red and falling. And as you can see, resistance, resistance. And then before you know it, we're back below the BBC. We get a retracement, the pullback holds. And then look at this candle. 9:30 Wall Street open. Support at the zone. Support sends us looking for resistance, and it found it at the zone. Resistance sends us looking for support, which we found at the zone. Support sends us looking for resistance, which we basically found at red and falling. We spiked it a bit, but you can see the low of the current candle is right on top of the zone. The zones are published Monday morning at 6:15 a.m. Eastern. We've published the zones since December 14th of 2009. So this past December marked 15 years. Once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. The Dow, here's where we opened, below the BBC. And we ran right down. Now see how red and falling got directly below price? That becomes potential support. Everybody had these targets 5 minutes ahead of the open. You only need 20 points to get your goal for the day with the Dow. So we opened at 484 and put in a low at 389. Didn't quite make it all the way to the short target. But red and falling turned to blue and climbing, and that took us up to the BBC. We got above it, leg, retracement, pullback held. And then we consolidated. See, the market wanted to go higher, but blue and climbing was on top. And again, that's always potential resistance as it's on its way to becoming red and falling. And so we got another big move down, 8:30 a.m. Eastern this morning. News driven. Now this low, 398, this low, 389. Okay. Market finds support, takes us up through the BBC. We hit the long target and the zone and the previous bearish cross. When you have a bearish cross that leads to an extended move, that's when the red line gets below the green line. The first time price revisits that area will almost always be good resistance. And it was. That resistance sent us back down and then we caught a huge leg. That's why the Dow is the only one in the green today. We've got a double top up here. We took out yesterday's high by a little bit. Okay. We're always suspicious of just a little bit. So from that double top, we pulled back to the BBC. And the pullback held, gave us a bounce. But we talked about this yesterday. See all these wicks to the upside? See, buyers are trying to move the market higher. But when you see all these wicks, that is bearish. So I would not be surprised to see price trade through the BBC on this move. And this low right here is where we had a bullish cross. It's where the blue line gets above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. So if we do trade through the BBC, this low right here is pretty important. If we get through that, there's your next low, your next potential low, your next potential low. And remember, we've got a bit of a double bottom here, and then there's the short target. On the Russell, we opened right at the BBC. Red and falling turned to blue and climbing. That got us above the BBC. Took us right up to the long target. And I guess we went a couple ticks above it. But we failed to take out this high from yesterday. That's a sign of weakness. Blue and climbing is directly above price. So you've got potential resistance at blue and climbing, and at this high, then at this high, and then that stair step. Remember, we talked about those wicks yesterday. Okay. So on this pullback to the BBC, if it doesn't hold, and we always expect it to hold until it doesn't, you had a bullish cross right here. Blue line got above the green line, led to an extended move. So if price finds resistance, hit blue and climbing, and trades below the BBC, make sure you're watching this area right here, roughly 2184, as potential support. And then this area here, about 2179. And then you got to look over here, 2176, that's an important area. And then you're at the zone, 73.74, and then the short target. On the NQ, this was the opening candle last night. And we dropped almost all the way to the short target. Not quite. Buyers came in right here, sent us up to the BBC, pullback held, this pullback held, this pullback held, and that sent us down to the target. Support bounced us up into resistance, resistance sent us down to support, and then we closed above the BBC, sent us up to the zone. Remember, 70% of the time, price is going to consolidate when it encounters a zone. 20% of the time you get rejection. 10% of the time you get the slice. That's when the 30-minute candle slices through a zone like it's not even there. Typically when that happens, price will retrace back to the zone it sliced through, continue in the direction of the slice. But there was not enough buying interest to let it tried. This opened green, but then it collapsed. So we're consolidating right now at the long target. Okay. Crude had a big day, but Michael's here, so we're going to pause, and he's going to give us a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform for a half an hour. Then I'll come back, finish up that recap of the alerts and our good word for the day.
Excellent. Here we go.
Okay, looks good.
All right. Good afternoon, everyone. Happy Thursday. It's Thursday. Partners meeting tonight, 8 p.m. If you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. All right, there is no credit card required for the trial. Click on that purple button and it will bring you to this registration page. Okay, on this page, all that we ask for is your name, your email, your phone number, 5 multiple choice questions, and down here gives you machine ID if you have one, if you're going to use Ninja Charts, but really gives you TradingView login ID. We really need that to enable your enable the indicators on your TradingView charts. All right, you need to have TradingView charts if you're going to be in the room. You don't need to, but it'd be best if you had TradingView charts if you want to do what I'm trying to do in there. Now, we had a very volatile day today. We had our best day of the year, but it was a very volatile day. We had 55 trades this morning. All right, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 27th day of February 2025. Today we made 600 ticks on the NQ. We were down 29 on the Russell, up 28 on the gold, and up 38 on the ES. That put us at $3,610 per contract this morning. Today took 4 minutes and 3 trades to get to $1,475. That again was with 10 contracts. All right, we took a total of 55 trades this morning. That is a lot of trades. On the month now, we're at $23,665 over 16 business days, averaging $1,479 per contract per 2-hour business day. There's some things I want to show, if I remember right. Hang on, Bart. I know you asked a question there, and I don't know if Dee saw that. But he will have to respond to that. He did respond to it. Okay. Yeah, so we're averaging $1,479 per day on the month. And on the year now, we're at $1,551 per day average. On the year, we're at $55,842. That is with one contract, guys. One contract. You know, we've gone almost a whole year before and not had that number. Things are just better than they've ever been. I can't say it enough. If you're doing the 24/20 blueprint so far this year, you would be trading 2 contracts right now. We'll be going to 3 next week. Well, I'll be going to 3 the week after next week. But if you had done it exactly the way that I did in the morning session, quitting when you get the goal for the day would now be at $8,820. $8,820, averaging $1,441 per hour. Okay, $1,441 per hour. You would have only had to work 6.11 hours so far this year. In the 2 months this year, 6.11 hours. Pretty good job. All right. Now, I'm just going to go over the trades that we did get, okay, because there were just a ton of them on every one of these. Well, the Russell didn't get that many. I'll start out with the Russell and just get that over with. All right, we ended up negative on the Russell. The trades that we did get that were positive were small. The very first trade here, we had a +2 on the Russell. Then we stopped out, put us at -23. Then we had a +2 that got us to -21. Then we stopped out, put us at -46. Then we had a break even, a +1, put us at -45. Then this was our big trade, a +10 to put us at -35. And then there was one more somewhere, a +9. Not a +9, a +6. It put us at -29. And that was it. +10 was our big number on the day for the Russell. I don't feel like I missed a bunch of trades there. I feel like I got pretty much all the trades, including all the stop outs. I guess I didn't get every trade. Well, I did. That was a break even. I got that one. This was during the break. That's why I didn't get that one. Yeah, it looks like I did get every trade on the Russell. Some of them went a lot more. During the break, there was a trade right here. Well, there was one right here at the beginning of the break. A nice win. A trade right here that the stop would have been up here, so it would have been okay. A trade right here that would have stopped. You would have gotten your stop to break even if you did it right. You would have gotten your stop to break even. A trade right here that would have been a win. A trade right here that would have been a win, and a trade right here that you'd still be in right now, about to stop out on. So it was okay on the Russell. It wasn't great, but it was okay. Now the gold, we were back and forth just a little bit on the gold. We did have a few stop outs on it, but let's just do this. I'll do alt and back because I don't know how many bars we had on gold today. Okay, it's not too bad. Okay, so here we are back at the beginning. Our first trade on gold was right here. We picked up 6 ticks on that. Oops, no problem. Sorry, is that the first trade on gold? Is that today? That is today. Picked up 6 ticks on the first trade, and then I didn't rate it in, but we stopped out in here. That put us at -4. We had a break even and a plus +3 that got us to -1. Then we had a couple of break-even trades, 3 break-even trades. Then we have a stop out right here. This might be the stop out that I was talking about earlier. Right, and so I missed the gain that we had in there. But going from this right here, there's so many trades. Going from this right here, we're at -4 right there. Okay, then we had a +3 that got us to -1. Then we had a +10 that got us to 9. Then we had another +10 that got us to 19. Then we had a break even. Then we had a +6 that got us to 25. Then we had a +2 got us to a +5 that got us to 30, a +2 that got us to 32, a +1 that got us to 33. And in here somewhere we stopped out. There's a few more trades in here. We stopped out and we went from 33 down to 23, and then went from 23 to 28. So in here somewhere there's a stop out that I took. I didn't draw the red arrow on, but we did stop out. We went down to 23, and then there's a blue one somewhere that's missing that I got 5 ticks on to get us up to 28, and that's how we ended it with the gold for today. Now, this is all during the break right here. You can see there were a lot of trades triggered during the break in this move up. A lot of numbers, but let's just look right here. Using the divergence, this was a valid trade right here using divergence. This was a valid trade right here using divergence. This was a valid trade right here that using divergence that didn't overlap. This was a valid trade here. This was a valid trade here that did not overlap. This was a valid trade. So looking at this right now, almost all the trades, this one right here, using the divergence would have gone long on this one. So that probably would have stopped you out to the tick. This was a valid trade. That was a valid trade. That was a valid trade. So there's some really nice trading there. It wasn't all the ones that you see the labels on, but a good portion of those ones you see the labels on. Gold had a lot of trading opportunity today. I was saying this morning when it was so wild that you could just trade one market today and do really well. As long as it's not the Russell. You can just trade one market and do really well. I'm only keeping the Russell there because we had that awesome day a couple of weeks ago, or last week, or whenever it was. Okay, this is the ES. Now we had a ton of trades on the ES too. Starting out right here, our first trade on the ES was a break even. Then our next trade was right there. We got 7 ticks on that. And then we got 8 more there to get us to 15. There were trades in here. I'm just not going to go through every one of them because we had 55 trades today. There's a break even, another break even, another break even, another break even, another break even. So every one of those break evens went 4 ticks into profit. All right, then from here we had a 4 tick that got us to 19. Then we had a 12 tick that got us to 31. And a break even. Then we had a 4 tick that got us to 35. Then I screwed this one up and I stopped out. -10 got us down to 25. Then we had a +4, got us to 29. A +1 got us to 30. A +3 got us to 34. Had a break even there. Then we had a +4 that got us to 38. Should have a stop out on the next one. Okay. So we went from 38 is where we ended. Okay, that was it. We didn't have a stop out on the next one. That's why it was going down. Sorry, I mixed it up with the gold. It went from 38 down to 28 if I did it in a row. There was no stop out. Okay, so that was it. We ended up with 38 on the ES. Wow. Told you a lot of trading. And during the break, there were a ton of trades during the break too. You don't see too many numbers in here, but let's see. In here, I'm just looking at the divergence trades. There was one here, one here, one there, one there, one there, one there, one there, one there. One there. Oops, one there, one there, one there, one there, one there, there. And there's one currently happening right now. Would have been from the open of this bar, you would have been short. So there were a lot of trades. A lot of trades on this wild day today. Okay, and that was the ES. Now do the NQ. Oops. Okay, on the NQ, let me slide this all the way back here. Okay. On the NQ, we missed a ton of trades this morning, a ton of them, a literal ton. So after we got our goal for the day, right after we got the goal for the day, we stopped out on the NQ right here. We're minus 60 on that. Then we got a 75 right there, and we got it back, goes to 15. Then we stopped out again. This one was my fault. I shouldn't have taken that trade, and I stopped out on that. We're at minus 45 at that point. We had to break even, and there were a ton of trades in here that I missed. Some really good ones, some not so good ones, but I missed them all. We had another break even there. And at this point on the NQ, we were at minus 45. And we had something there that got us to minus 27. We went from minus 27 to minus 13, and then went from minus 13 to plus 62. So this was a 75 tick trade right here. Went to plus 62 on that one. We had a break even, and then went from 62 up to 94. Had a break even, then the 75 tick trade went from 94 up to 169. Then another 75 tick trade went from 169 up to 244. I think that's 75. Yeah, it is. Then we had a break even, went from 244 up to 260, then 260 up to 335. This was a 75 tick trade. A break even, another break even. We went from 335 up to 379. Then we stopped out. So we were missing one. Went from 379 up to 454, and then we stopped out. We went from 454 down to 394. Then we got it right back after we stopped out. Went from 394 up to 469. Then went from 469 up to 477, and 477 up to 481, and 481 up to 558. And then the last trade that we took right here, I didn't really mean to make it go right to 600, and I wasn't trying to, but we got 44 ticks on that. And that brought us right to 600 even on the morning session. But it was really wild. There were so many trading opportunities. I mean, you see the numbers. The numbers don't go back. I got to figure out what's wrong with that, why they stop after like 2 hours. What time is it right now? They stop putting the numbers, the labels in after a certain number of them. You see. But during the break here, there were just a ton of trades. You can see all these numbers here during the break. Look at all the 50s that you have in there. 50s, 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 50s. That means it started at the bottom and went to the top. Started at the bottom, went to the top. Started at the top, went to the bottom. Started at the top, went to the bottom. That's pretty crazy. That you got a lot of volatility when it's like that. Now, one of the things you can do when it's like that, that suggests you could be using, maybe too small of a bar. You could go to a larger bar. You just bump it up to a 75 range. I don't know what the 75 range looks like, but if we go here and we look at it, even the 75 is getting 75s, 75 there, 75 there, 75 there. It was really volatile. But that gives a ton of opportunity. Okay, it gives a ton of opportunity. So during the break, go back to the 50 range because that's what we were using. We'll just go to the divergence trades on the 50 range because that's what we were doing this morning. All right, all these numbers come from a optimized trigger trade, but the divergence trades, a lot of times they overlap. Sometimes they don't. Like right here, there's a beautiful divergence trade right there that didn't overlap. There was one right here that did overlap. Both of those really nice trades. There was one right here that didn't overlap. That was a nice trade. One right here that did overlap. That ended up, it would have gone in the right direction after all. There was one right here, a divergence trade that did not overlap. That would have stopped you out. There was one right here, a divergence trade that did not overlap. That would have been really close to a stop out. There's one right here that would have worked out, that did overlap. One right here that would have worked out, that did overlap. One right here that would have worked out, that didn't overlap. One right here that did, that would have worked out. And so you can see there's just a ton of opportunity. No matter what you're doing, the divergence trades, they're really, really good. When you have the markets like this, the markets weren't really choppy, they were really volatile, but it was volatile within a range. It seemed like, like you get this really choppy stuff and then you get one fast move. And that's what I've been trying to tell people, when you get this one fast move, you're probably not going to get many trades because you're going to be buried in the overbought or buried in the oversold. Like the big leg up right here, buried in the overbought, no trades. This big leg down, buried in the oversold, no trades. Okay, it's when it gets into the chop that sideways that we had so much opportunity today. It was just a fantastic day. Best day of the year. Anyway, that's where we stand. We're in some chop right now. Look at this chop right here. And you guys went to my thing yesterday. We went through the 3 different kinds of chop. This is channel chop. This is the best kind of chop you can get. It's not really giving us any trades right now, but it's going to go just a little bit further. This is channel chop right here too on the ES. You see, I was going from the top to the bottom to the top to the bottom to the top to the bottom to the top to the bottom. So the way that the trades work out, you had a trade right here from the top. You had a trade right here from the bottom. You didn't get one here with the divergence trades, but you did get one right here. So you had 1 win, 2 wins, 3 wins, 4 wins, 4 winning trades in this chop right here. 4 nice winning trades. Any one of those was enough to get the gold for the day. There's a trade right here on the gold. The gold's got the same kind of chop going on. And let's go to the Russell right here. It's already gone 18 ticks into profit and then some. So it was just a fantastic trading day today. It wore me out a little bit, but it was a great day. So yeah, so we'll just sit here and trade whatever comes along right now. All right. So the Russell had the long trade from the open of this bar right here. Had a long trade. That ran up pretty well. Now it's got a short trade pretty much from where it is. The Russell does. For anybody that's watching, I don't know where they're watching right now. But yeah. It is just a fantastic trading day. You know, when I was off when I started out, I was not feeling in the groove when I started out. It took me a little while. It took about 15, 20 minutes for me to really get in sync with everything. Normally I am as soon as I sit down, but today I wasn't for some reason. And that is it. All right. So there's a trade here that I didn't do on the Russell. The Russell's the only thing I was negative on today. I had my number all day. But it was so fast. How do I get in so fast? For example, you saw the setup and it was 20 seconds, it was done. By the time you get in, within those 20 seconds, it was already going against you. Well, you gotta, I mean, it's slowed down quite a bit right now, Dan, but I'm gonna go over stuff tonight in the partners meeting if you join. I'm gonna go over stuff in the partners meeting tonight. But when I'm getting into trade, if I see something developing, I'm watching. I'm just scanning and waiting for it to show me which one's going to happen next, and then I'm just ready for it. When it happens, I just click in the green or I click in the red. As long as the yellow is in the right place, I click in the green or I click in the red. Usually, it's going to go a little bit further against the direction you want it to go at the entry of the trade, right? So you can usually get a better entry than what you would normally get. You know, the question was how do I get in so fast? Because the setups are really fast, and they can be. They definitely were on the NQ particularly. It was really, really fast. The S was a little easier to do, but getting my stop to break even and doing that stuff today was, that was more of a challenge than it normally is, because the ES trades, they didn't go very far, most of them. When they went little bits, they didn't go very far. So I had to get my stop to break even and then lock in 1 tick or lock in 2 ticks. And it was tough because, if you watch the thing that I talked about the chop, we had 3 different kinds of chop, but we really only had 2 of those today. We had the channel chop, which was great, but we also had the triangle chop. And the triangle chop is a long right here on the S. So right now I just put a long on right here. Okay. Now I screwed this one up because I should have been long at the bottom of this bar. I'm going to throw my stop at break even. I'll bring it over and show you. I should have been long at the bottom of the bar and not right there where I got in. But see, if I was waiting for it, if I was waiting for that down close where it pushed into the oversold right there, I would have gone long right here at the bottom of that bar and taken some decent profit. I just got to break even on that. But you see the 7 right here says it went 7 ticks into profit. It's a 7 range bar. That means it started at the bottom and ended at the top with nothing in between. It's got a short right here. Now, this isn't a great short to take right now either. Look, another 7 going in the opposite direction. But you should have been short at the top of the bar, not down here at the bottom. If I was paying more attention and not talking, then I would have taken that trade too. But right there, the goal for the day. Easy, right there. Okay, so the way that I do it is, I just get ready to put the trade on. I just have my cursor hovering in the green or in the red, depending on what direction you're going in. And when it happens, I just click. And it's usually going to get me in at the open or better. You know, with the entry price that I want to get in or better. All right, that's the way I have my DOM set up. Okay. Now, what are you trading on, Dan? You told me what you were trading on. I don't remember. I'm going to do Shift Z. That's the auto center thing. That's what I was trying to do. Trading view and Sierra DOMs. Okay, so you have the Sierra DOMs. All right, so you have the same setup I have, but you don't have. Do you have these DOMs? Did you get all these DOMs going? Did I do that for you? Did you do that on your own? Okay, so you're doing the same thing. And yesterday we talked about setting it up so you can automatically bump your stop to break even with the Control Z, right? And there's another one that I have set up to auto center. You know, when it's like this, Shift Z centers it. It's another keystroke. You're not going to find that one very easily though. It's Shift Z. But let me show you how to find that one. If you're interested, you want that one? Because on days like today where it runs off of the screen really fast. Yeah, I have the break even one. I created the break even one. That's Shift Z. I mean, it's Control Z is break even for me, and Shift Z is the auto center one for me. This was just a long trade here on the NQ. The long trade should have been from the open of this bar right here. All right. Now I believe it went into profit enough. Bump the stop to break even. I'm not sure about that though. It would have to go 5 points. So 89 up to 94. It did go enough to bump the stop to break even. Okay. Did you get that email I sent out yesterday, Dan? Were you on that list? About what it takes to become a partner and all that. I thought you were on that list. No, not that one. Here, I'll go find the one that I sent out yesterday. Hang on. Be innocent. Here it is. I think you should have gotten the PF email, right? No, you didn't get it. Maybe. I don't know. Maybe you didn't. Here, I'll send it to you right now. Okay, I just sent it to you. As I know we were talking about that a couple of days ago. Yeah, which is horrible. All right. So if you got the Sierra DOMs going, you know, I was dreading getting out of the DT Pro DOMs and going to any other kind of DOM, but I think I have the Sierra DOMs working as well as, if not better, than the DT Pro DOMs did. Whenever I put a trade on, my stops were always in the right place with the Sierra DOMs. That wasn't the case. It was almost never the case with the DT Pro DOM. All right, there's a short right here on the NQ. It's a little late to get into it if you didn't get into it. All right, the entry point should have been right there. At the open, actually, it was there, right there at the open of that bar. 83.25. 83.25. I didn't get a very good fill on it, but I'm in it. It stops at break even. And I was just locking in 1 point, and it just took me out of break even. Right, that is not a trade right here, but that last one gave about 50 ticks. The ES has a short right here. Now that already triggered from up here on the ES. Right, 73.25. It is too late to get into that. It's already gone down to 72. Yeah, Dan, I gave you a little bit better opportunity. If you read through the email that I just sent to you, it gives you a little bit more back. Okay. All right, this is a short here again. The NQ, I just shorted it. Here it is. Now that needs to go to break even after 5 points in profit. So I'm not exactly sure where I'm in. So O2 would have to get down here to 97.25. 97.25. Okay, let's get a 66 stop on it and a 75 tick target. Now, what should this do right here? If it breaks up above this level right here, it's probably going to stop me out. It should retrace down to this level right here, right now. It's in some pretty decent range chop right here. Okay, but if this bar ends up closing up, then it's going to stop me out. But there it is, stop to break even. It's not going to stop me out. It might take me out of break even, but it's not going to. I'm not going to lose 60 ticks. What it should do is get down to right here at 21.085. That's what it should do, right about here. All right, the gold has got a trade over there. Now I don't know if I'm too late for that one. Would have been the open of this bar, so no, it's not too late for that one, and that's in some chop too. Here's the gold. Now I had the gold screwed up all morning. I had the wrong bracket on it, but I got the right bracket on now. And so the gold is trading really slow right now, really, really slowly. I took a break even on the NQ trade I just did, yes. It did go to 5 points. I thought it did. From my entry, it did. I don't know what the low of this bar is. The low of this bar. You do it from where you enter, not where the open is. You do it from where you enter. Oops, I just lost my gold dom. Hold it. Hold it. There's my gold dom. Here it is. Okay. Should be a bump gold yet. From 0.6, it's going to get down to 0.2. So no. So the low on this bar right here. I just did it again. The low on this bar right here was 85. It wasn't that bar that I entered on, was it? It was that bar that I entered on. I thought it was lower than that. That's not right. Anyway, let me find my gold dom while I figure this out. Okay, here's the gold dom. It's about to stop me out. It just did stop me out. All right, well, the gold stopped me out. But from my entry on this, it went down 5 points from my entry, where my entry was. It needed to go down to 87, I thought, is what it needed to go down to. And it went down to 85. Let's go high, the low of 96. That doesn't sound, none of that sounds right. I don't know. It's all recorded. You can go back and look. And your entry was 21.097. Yours was 21.097. Okay, so your entry was down here. My entry was up here. I'm guessing. I don't even have to go back and look at the recording. I thought it went 5 points, and that's when I bumped it to break even. My dom was actually covering it up. There's a long trade here on the gold right now. Okay, the short trade that I just stopped out on, and it doesn't even look like it was a valid short trade here now. I guess it was probably from over here. Right, and now it's got a long trade. And so the long trade, I'm going to go to break even. That's interesting. Hang on. Okay. Well, I'm at break even on the long trade anyway. Here it is. And I'm out of break even on the long trade. Is there a way to make the horizontal lines thicker in the context indicator from the table values? The context indicator for the table values. Kevin, you're talking about inside the context PP, inside the table. You mean these lines? Oh, you're talking about the lines on the chart. These lines. I don't know about that. I don't know if I was able to do that. I don't think I was able to do that. Here's all I could do to get them drawn. Trade zone. Here, down as all those arrows. Wow. That was a while ago, it seems like. No, I don't think I put that. I don't think I put that in there. The ability to make those thicker. Lag length. Green only. Oh, that was I remember what that was. Yeah, there's no way to do that. I remember trying to do that, I think, at some point though, Kevin. But I wasn't able to get it done. I believe somebody else asked for the same thing about a year ago. We were really digging into this, aren't you? Yes, okay, so back up there. All right, so right here now. There's a short. It's actually from the open of that bar right there on the gold, right here. Okay, now the last one that I stopped out on, it was a short. And was it over here that I stopped out on that? And I went all the way down and did all that again. I don't know. Here, this short I'm not stopped out on. I'm going to actually lock in 10 ticks on it right now. That makes up for the 10 ticks I stopped out on a minute ago. And I have my target all the way down here, a 30 tick target. Right, it's a 10 by 30 bracket on the 7 range. I finally fixed that this morning. I've been using a 15 by 45 bracket. And the NQ's got a long trade right in here. It's already gone into profit a little bit right here on the NQ, but I don't think it's gone 5 points. So 91.50 up to 97.50, it has gone. It's gone 6 points into profit. Crap. All right, well, I took it anyway. I'll move my stop to break even right now. Here it is. I'm in at 88.50. Okay, I'm just going to lock in. Well, I meant to lock in 6 points, but I'm going to lock in more. 88.50 up to 150, that's 13 points. Isn't it? Yeah, 13 points. So that was a pretty good gain right there. 52 ticks. The ES just had a short right here that I missed. Wow, it's 129 already. Where has the day gone? All right, so we just got 52 ticks on that. We got a break even on it earlier. I don't think we've got any trades there. We got a plus 10 and a minus 10 over here on the gold. We didn't get anything on the Russell. And the ES had a nice trade right here. Just had a nice trade. I had a couple of nice trades while I've been talking, but I didn't get any of them on the ES. I don't remember. And that is it. That is it, guys. So with that, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page. On this page, all we ask for is your name, your email, and your phone number. Down here at the bottom, give us your TradingView login ID. Okay, we really need the TradingView user ID if you're going to take the trial, because we can't activate the indicators that we're using primarily on the chart down here are only on TradingView. If you don't have TradingView, then we don't know. And you're not going to be able to take these trades. You can watch my charts in the room in the morning, but there's a little bit of a delay most of the time. So you'll be able to watch me take the trades, but you won't be able to take them yourself so much. All right. Today we had our best day of the year, $3,610 per contract this morning. Right. It was probably better than all days last year too. Our best day of last year was in December. We had our best and our worst day in December last year. That was our worst day. And that was our best day. So yeah, that's our best day in 2 years. Fantastic volatility this morning. That's all I can say. That is it, guys. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep, I am.
Excellent.
Recap of the morning session.
Today it took 4 minutes and 3 trades to get to, hang on, I want to get this right, to get to, I'm still trying to get it, here it is, to get to $1,475 this morning with 10 contracts on.
Good job.
Thank you. Thank you very much.
All right, guys, we're going to wrap this up. We left off with crude oil. This was the opening candle last night, right at the BVC. You had some blue and climbing there. And so it was just wide-ranging consolidation. We did reach down before we took off and touched the short target to the tick. Support. We'll always send the market looking for resistance. Up we go. Sliced right through that long target. Got to the zone, consolidated for a few hours, and then we had an interesting candle here at 8:30. Green all the way up, but then by the time it closed, it was back below the zone. So from support at the zone, a leg, a retracement, a leg, a retracement. And then we had this high flyer. Took us just shy of this high right here. And then in 30 minutes, it came all the way back down. Now we're in a situation where the step line has crossed to the right side of blue and climbing. Blue and climbing is directly above price. That's potential resistance. So from here, I would anticipate a retracement back to the BVC. As you can see, the pullback to the BVC holds more often than not, whether it's pulling from below or pulling from above. Even when it spikes it, okay, like this was a green candle all the way up, but by the time it closed, and all these wicks are touching the BVC, so never lost physical contact with the BVC. So we got a leg, a retracement, a leg, a retracement, and then this is the high of the session. 70.54, 70.56. So see, we missed that by 2 ticks. That, along with the fact that the step line is crossed, even though the step line is starting to hook back up like it does want to go higher, I'd be very, very careful. Now, you might find something in here. But again, the highest probability thing right now, after this huge move, is to get some kind of a decent retracement. Okay. On gold. Gold, down day, sideways day, another down day. We opened last night right at the weekly trading zone. Blue and climbing, turned to red and falling. That took us below the VBC, right down to the short target. So with the step line, crossed red and falling, turning it to blue and climbing. So we consolidated there for a bit. Then we got below this zone. So a leg, a retracement, a leg, a retracement, a leg, a retracement, a leg, and a retracement. Now, pullback held, held. This one, be careful, because red and falling has turned to blue and climbing. It happened back here, so that's not a guarantee that price is going to take out this high. But if we trade above this high, then make sure you look at this area as potential resistance, this area, this area, this area, right up to the zone. If the pullback holds, just know you've got potential support wherever blue and climbing is at the time. And on silver, here's where we opened, made a pretty quick drop to and through the short target. Buyers came in, support sends us to resistance, back to support, back to resistance, support. Now these highs right here failed to take out that high. This high failed to take out that high. So you got a high, a lower high, and then some lower highs. Back below the BBC. The step line has crossed red and falling, so look for a retracement back to the BBC. And then another leg to the downside. You've got a bearish cross right here. So if price spikes up through the BBC, look for potential resistance right here. Okay. All right. And on the daily, we had that little green body doji yesterday, and well, we'll see where we close today. This is the 24% Fib retracement. That's major support. We're in the process of getting a bearish cross, and that could end up taking us back to the 38% Fib retracement. And if we get through there, then there's a couple areas of potential support here, and there's a bullish cross just below the 50% Fib retracement. Not a prediction, that's where we're headed, but certainly an observation. Okay. The support we got at the 24% Fib bounced us to the step line, but we need to see a close above the step line before we can go up and challenge this resistance times 2 at red and falling and the BBC. To become a member, send an email to support@cfrn.net. In the subject line, put "I want to become a member." The body of the email, put your name and phone number. We'll send you an email that explains what it means to become a passport holder, and there'll be a link you can click if you want to become a member. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. No matter what profession you want to go into, you need somebody to teach you how to do the job, whatever it is. Yet, 9 out of 10 traders go it alone. But they don't realize they're going it alone because they bought a course, they watched a bunch of YouTube videos, they read some books, and there's nothing wrong with those things. They're just not a replacement for a living, breathing teacher putting on, taking off trades live in real time and answering every question that pops into your head while you trade along in your demo account as you prepare to qualify to go live. Along with the group training, you get one-on-one private mentoring, no extra charge. The strategy you learn, the indicators that you own as a passport holder are fluid across all markets, all time frames. As a passport holder, you'll get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published each evening. Monday mornings, 6:15 a.m. Eastern, you get the weekly trading zones. And again, once the zones are published, Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. And you're able to attend the Members Only Workshop every Thursday night, 8 p.m. Eastern, and that's tonight. So members, have your questions ready, and if you've been on the trial and you want to be in the workshop tonight, send that email, and we'll make sure you get in. Everything a trader needs, all under one roof, at one low price. Plus, you get the golden key that opens all the private channels in Telegram. You got public channels, private channels. Once you become a passport holder, you have access to everything. Everything a trader needs. All right, let's wrap this day up with our good word for the day. For the last 3 days, we've talked about moving from failure to success. Let's keep going. Psalm 126, verse 2. We were filled with laughter, and we sang for joy. To move from failure to success, you must do these. Number 1, learn to laugh at yourself. No matter what you lose or how often you lose, never lose your sense of humor. When you take your mistakes too seriously, everything becomes a life or death issue. The psalmist wrote, "When the Lord brought back his exiles to Jerusalem, it was like a dream. We were filled with laughter, and we sang for joy, and the other nations said, 'What amazing things the Lord has done for them.' Yes, the Lord has done amazing things for us. What joy! Restore our fortunes, Lord, as streams renew the desert. Those who plant in tears will harvest with shouts of joy." Psalm 126, verses 1 through 5. You may not be able to laugh about your mistakes, but you can learn to laugh in them. Note the phrase, "when the Lord brought back." God can bring you back. American pastor Tim Masters says, "Failure is the productive part of success. It provides the road you don't have to travel again, the mountain you don't have to climb again, and the valley you don't have to cross again." When we're making mistakes, we have a choice to give up or turn to God for guidance. If we maintain the right attitude, mistakes can lead us to do what we should be doing. And number 2, learn from your mistakes. Successful restaurateur Wolfgang Puck said this, "I have learned more from the one restaurant that didn't work than from all the ones that were successes." Isn't that usually the way it is? You don't lose, you learn. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.